Hey everybody, I'm very excited to be here with a esteemed panel of individuals operating some of the largest organizations involved in crypto. I think that we've all been able to live in a moment where, I think for so many years people were saying, oh, the institutions are coming, oh, mass adoption is coming, but I don't know, every day I wake up and I feel a little shocked to see it actually happen. Every day is another crazy piece of news that would be impossible to think about even, 8-9 months ago. So we're gonna dive into a conversation here about what it's like to be running a very large organization that has oversight over broad parts of the market and how it engages with TradFi, with crypto native organizations, and learn a little bit about what it's like. So I want to start with introductions from everybody here, and then we'll jump into kind of a temperature check, and then a little more details about the way that they experience the crypto industry. So I'll pass it off.
Thanks, Mason. Thanks for having me here. A very good morning to all of you. I'm Roshan Robert. I'm the US CEO of OKX. We are one of the largest crypto exchanges in the world, and recently launched here in the US sometime in April of this year. Personally, I've been in the financial services industry for over 20 years. I've been at the big banks, and then I stepped down from my role at one of the large investment banks to help Mark Ash build out Hidden Road, and took Hidden Road to where it is today, and then also co-founded another firm called Celeste. Joined OKX over last summer with a mandate to build out here in the US.
Welcome.
So I'm not Brett Tejpaul, he's my boss. I'm Chris Amarello. I'm an institutional salesperson for Coinbase. Brett, unfortunately, had to go back to New York this morning, so he couldn't make it, so I'm standing in. So I've been at Coinbase for about 3.5 years. I came from Goldman Sachs. I was an institutional sales guy there in the global markets division. I would say that, I've seen tremendous change. I think we're at the cusp of something really huge. I think the world changed dramatically on November 5th, and I don't think people in the industry were really prepared for it and for the rapidity of change. Things are going to move very fast. Things are moving fast now. I just think I look back at those 3 years. It's funny, at Goldman, if the SEC sued you've settled. You said how much, and you wrote the check. And at Coinbase, when the SEC sues you sue them back. That was crazy. And I'm sitting there in the chair saying, what did I just join? And so, we fought and we won, and the industry won, and the election changed. And I think, the stand with crypto and all of the efforts that have been made on the policy side have just been tremendous. And I think even Coinbase, I think, is taken aback at how aggressive the regulators are and how much they want change. So it's an exciting time to be in the industry, and I'm glad to be here. Thank you.
Morning, everyone. I'm Dan Nunez, Cohen, Head of Policy for North America for Crypto.com and Senior Regulatory Counsel. I joined the company in April of 2022, so I had about 1 good month before the crypto collapse in 22.
But you stuck around.
Well, when you start at the bottom, everything looks up, right? And Chris, I completely agree with you. Our experience building in the United States, we've been here about 5-6 years, but it started rough with lack of clarity, with the SEC just seeking to impose novel theories of regulation on us. And you're totally right. I came from a large global law firm before that, where I was a lawyer. And when the SEC comes for you, right, you're looking to settle. But we sued the SEC to defend, our right to engage in this business. And it's wild to spend, almost 2 years of your life fighting with the SEC. And then 2 weeks ago, they invited me in to come talk about how do we get clarity for crypto and custodians and registered investment advisors, and what rules can we put out to really enable institutional investment. So it's an incredible change of pace. I will definitely swap it for the days of SEC lawsuits and market collapse. So I think we're in a really good spot.
Yeah, that's awesome. It has been quite the journey, hasn't it? I want to dive into one of those questions, one of those points you made, and then I have a broader question as well. But the first one is, like, I am, I dedicate my time to mobilizing Americans that are pro-crypto. I'm very competitive. I love my country. I want America to be the crypto capital of the world. And Crypto.com, OKX, you guys have very broad global presences. So, you're talking about engaging with the SEC now. You're talking about launching in the United States recently. I'm just curious from your perspective, and then Coinbase, you guys have always been the United States first. So you guys, you kind of went the hard way in a lot of ways. And I think you guys deserve a lot of credit for that. But I'm curious from your perspective, like state of play. We have a president that's like, America is going to be the crypto capital of the world. We have an SEC that says, oh, we're going to launch Project Crypto, which is awesome and insane to see. But from your perspective, like, where is the United States in the globe? What is from your vantage point operating in this broader ecosystem, where are we standing? Is the United States positioned to be the crypto capital of the world? I think so, but what do you guys think when you're seeing the entire population of the earth?
I'm happy to go first. Yeah, I mean, I genuinely think we are on the cusp of global leadership in the market. And part of it's structural. Like, this is the biggest, wealthiest market in the world. It's the most important. It really drives what happens everywhere else. So, like, the demand is here, the long-term market participation from retail and institutional, it's all here. And now we finally have regulators who want to provide clarity and innovation and enable what will be long-term structural changes in the markets. We participated 2 weeks ago in the SEC CFTC roundtable on harmonization, where we're talking about these key issues, right? The sprints towards tokenized collateral and stable coins so that securities trading, derivatives trading on margin can become 24/7 and on-chain. We're looking at rules for portfolio margining so that all of our customers can come to one app and put down stable coins and then engage in the financial positions in securities, derivatives, and spot crypto, all in one account, all with the same set of collateral 24/7, and part of that being on-chain. And like, that's a huge game changer, and you're not seeing that in other countries. Like, you don't see that in Canada, the UK, the EU, Singapore. And the rules that we adopt here soon, everybody else will follow. Everybody's looking at us. So from our perspective, we really do think the US has this great kind of 3-year period to cement leadership, and that will have huge knock-on effects globally.
Okay, so from Coinbase's perspective, obviously we're a global company. We do have offices and international exchange. But I think if you think about Brian Armstrong, our CEO, I think he's a Texan. Like, he's a true blue-blooded American. Like, I think he really wanted to make it work here, and he wasn't going to give up. And we did obviously contemplate moving overseas or doing something, but I think he just stuck to his vision and said, this is where we're doing it. It's obviously inured to our benefit significantly that, as a U.S. entity, it's a lot easier for the BlackRocks and the Fidelities and the Invescos to face off against us. And so, we've got 11 of the 12 ETF issuers are onboarded, and we custody 80% of the assets for the ETFs. I think, and in this next round, we'll actually pick up the 12th that we didn't have, which is Fidelity. So it's in their S1 filing that went out last week. So we will have all of the large issuers as customers who are on our platform. And I think that has a lot to do with being a U.S. regulated public company. And so I think the bet we made paid off. But again, we are a global company, and I think we are obviously, conscious of all of the, EMEA and all the regulations around the world, and are certainly constantly keeping up with them.
Yeah, we got the standard of crypto in Canada, UK, Australia as well. So the global efforts are not ignored. I'm very appreciative of Coinbase planting the flag, so to speak.
In fact, even if you look at data, right, and metrics, you'll see around 25% of all investments in the space are in the United States. So the U.S., even when you look at it from a data perspective, has assumed a leadership role as far as crypto infrastructure is concerned. And I'm sure my colleagues here have played, and their firms have played a yeoman service to the industry, and that's really great. Now, when you look ahead, I think there's a lot of tailwinds for crypto as well. You look at the Genius Act, the Clarity Act, and how we're sort of really going forward with the regulatory infrastructure here in the United States. I think this is a chance to sort of really increase that lead that the United States has. And part of, I think, the role that a firm like OKX plays here in the US is to really bring in the technology expertise that we have developed over the years. OKX goes back to 2013, with probably one of the oldest exchanges in the space. And we focused on, we are basically an engineering shop. So we have over 2,500 engineers who've been working on this and becoming an expert in this space over the last 10, 12 years. And we want to bring that expertise, that technology expertise, the product expertise into the United States. And I think that'll really help the growth here as well.
That's interesting, and yeah, we're glad to have OKX in the United States for sure as well. I want to dive into the infrastructure piece a little bit because, I mean, me personally, obviously I use exchanges. I've been using exchanges for so many years, but behind the scenes, and this is what I actually am curious about when it comes to custodying for the ETFs as well. Like, what does this infrastructure actually look like? If we're talking about a one-stop shop exchange, what is the innovation that you guys are having to build? You're talking about deposit stablecoin, get access to all financial products, derivatives, all that stuff. But first off, like, what is the innovation that's so exciting that differentiates this maybe from a TradFi perspective, but also when we're seeing this get built, and you guys are talking to institutions or regulators, what are the questions that people have that what are they afraid of, right? Like, crypto is scary to a lot of people. What are the concerns people have with, like, wow, you're a big institution, we want you to participate, but you're hit with objections. Like, what does that look like?
Do you mind? Having been in the space for a long time, right, I think the three main obstacles that institutions have in getting into the space is security. This is about moving money on the internet, right? So security is probably the number one piece that befuddles institutions, and they have to get comfortable with that, right? Next is compliance. Right? There is a line in the sand when it comes to AML, KYC, transaction monitoring, right? How do you do it across both the cash side and the crypto side, right? And I think that's an important learning curve that a lot of these institutions need to get up to speed on. And the third is scalability, right? So there are a number of products that are being launched on public blockchains, right? Lending and borrowing, there are DEXs coming up, there are asset management services coming up on DeFi platforms. And that's all very good, but when it comes to institutions actually getting into that space, the question is, do they have the infrastructure to support them to scale in these areas or not, right? And these are the three main questions that I think as an industry, we have to get institutions comfortable with.
So from Coinbase's perspective, I think I agree with everything Roshan said about security. Like, people are petrified they're going to lose their coins, and I think that's the biggest hurdle first, is like getting them comfortable with your security, how you store coins, how you custody, cold storage, and how coins move. I think another element too is the institutional sort of pedigree of your staff. Like, do you have, like, most of the people in Coinbase, I think we have 600 in the institutional side, and this isn't in development, this is just in sales, trading, operations, et cetera. And most of them came from banks, Morgan Stanley, Goldman, JP. So they really understand TradFi, but they've migrated into this new world of crypto. And I think, that's what I often hear from my customers is, like, the degree of institutional or seriousness that Coinbase takes its customers and how it operates is really a comforting thing. And I think that's huge. I think so much of this is psychological in terms of getting over the hurdles. I mean, all of the other things are sort of table stakes, like you have to get security down, you have to have KYC down, all of that stuff is just, to show up. And then it becomes like, well, who's walking into that customer's office? Who are they interfacing with? Do they feel comfortable that that person knows what they're talking about and understands their pain points? And I think that's a big part of it. And I think that's, one of the strong points of Coinbase.
Yeah, I agree with all that. And just to add too, I think on the regulator side, it's also just fully understanding which legal entities and teams are responsible for what activities, right? Who is responsible for settlement? How does it look like traditional movements, or how is it different? And if it's different, is it safer, or is it just a different risk that they have to think about? And then really just understanding things like, your SOC audits, what does it mean in this context? Ensuring, right, that things around wallet protection, seed generation, things like that on the custody side are buttoned up and clear, and just getting people sophisticated on that end. And then I think with the Genius Act, the Treasury Department's got their ANPR, they're gonna have rulemaking, just getting that further clarity on knowing which tokens are gonna count, making sure, there's visibility into compliance for those will really enable these other use cases in SEC, CFTC, in state-regulated products to take off, because there's that comfort that the OCC's rules are clear, they're set, the right players are involved in doing them. And then we all know, right, the reliance on these kind of tokens is secure because they meet these federal law standards.
Okay. So I want to talk about, I guess, regulation a little bit more then. And I'm curious, the past few minutes we've all been bullish and pumped up about the regulatory environment, but there's still obviously no market structure bill, and there's still questions, like rulemaking is yet to really go, like really begin, right? And there's stuff in the Genius Act where they have clauses where it's just like, things must be interoperable, but what does that mean, right? So you're talking to the SEC, you guys are all engaging with it, all types of stakeholders, but what are the big blockers still? Like, again, you said 3 years, right? We've got one law. What are the things that are not answered that keep people from actually fully participating? And what are we missing out on when people are dealing with this uncertainty?
Yeah, I can start. I still think there are some open questions, especially for advisors, around staking, just making sure it complies with the custody rule, right? An advisor has to make sure a qualified custodian has control of the assets. Does that work with staking? I think the SEC is very inclined to agree with that. So, but just getting those conversations, how does it work for each token too, right? Because that's the main difference with TradFi is, at the end of the day, like a lot of the products are so similar, right? We all get how they work, but with so many tokens that have so many interesting and different variations, just making sure on a tech basis it's like. So I think that's one. And then tokenization itself of real world assets, like what does that look like? How do you make the token itself the actual instrument, whether it's an equity or a bond, and more archaic things like transfer agents? How do you need them? How do you use them? Whitelisting wallets. And then how do you have more interoperability, to your point? I think that's still an open question, right? What does that mean? How are networks alike or different? How much control over bridging, who makes that decision, right? Is it the exchange? Is it the customer? So those are some open areas, but I think those things are getting ironed out, and I don't think they pose like long-term problems for growth.
Yeah, I would add on that too that, the regulators are pushing for things to move really fast, and they want things to happen, and there's going to be a lot of gaps, and there's going to be a lot of holes, and it's just, I think it's the nature of change. For example, like talking about staking, like right now the ETF issuers who are contemplating or put in filings for a Solana or an ETH staking ETF, like they're waiting on the IRS to tell them what the tax consequences are going to be of those rewards, and that's that's holding up everything. Like that's the SEC is comfortable with those issuers moving forward, and they're not going to move forward until they get clarity on the tax consequences of the rewards. So I think it's just the nature of changes. There's going to be gaps. I don't think there's anything we're afraid of. I think it's just, we're sort of driving on the road as we're making it, and there's always going to be bumps and problems along the way. But I think there's a willingness to try things and to move forward. So I think the momentum is there. It's just there's going to be pieces that are unknown, and I think the firms that are more comfortable living in that space are obviously going to have a huge advantage. The ones that are going to wait until everything becomes absolutely crystal clear, I mean, it could be too late. Like you're going to be passed by. So, there's risk associated with everything. There's risks associated with not doing something, and there's risks associated with moving ahead with, like Grayscale did with ETH and their rewards. Like, and some of my ETF issuers were like, "Wow, that's I'm not rolling those bones." So, there's just change has a lot of risk, and I think you have to embrace it intelligently. But I also think there's just tremendous momentum from the regulators and a lot of the industry players to really move this forward.
Yeah, I'll try to put a little bit of a business lens to that question. So you have different parts of the ecosystem that are growing at different rates of speed, so to say, right? With the passage of the Genius Act, you have an industry where, the payment stable coins, which are right now at around like 300 or 400 billion of market cap, that is slated to grow to around a $2 trillion market cap by 2028, right? And there are various pieces of research that put that number at anywhere between, I think, 1 trillion and 3 trillion, right? But that, in any case, that is a amazing rate of growth for which, will allow stablecoin industry to sort of really progress in a certain fashion. Now, that can only happen if certain other parts of the ecosystem is also enabled, which is where, the Clarity Act and the passage of certain aspects of the Clarity Act and how, how SEC and CFTC will divide their jurisdictional points of view, et cetera, will come into play, right? If we have a form of the market structure bill actually being signed into law at some point in time. Now, and that will enable a lot of assets that are being sort of traded on public blockchains to be traded in a more constructive or in a more disciplined fashion with certain guardrails in place. So that's one. But I feel that there is another aspect of the ecosystem that needs a tremendous amount of focus from the regulators, and that's the DeFi side, right? And if you look at the DeFi side right now, you have, I guess that is a market that is currently at around $100 billion. If you look at the key assets being traded on DeFi platforms, right? But that is also globally an area that is growing at a compounded rate of growth of around 20%. So then the question is, do we in the US want to play a leadership role there? And we can. And that's the area where you have a few firms that is creating the underlying infrastructure that will allow DeFi to grow, right? And this is infrastructure where you're actually binding together over 100 public blockchains and allowing people to transact on those public blockchains, right? So you have to build, you have to build the analytics layers to allow people to do that. You'll have to build trade services. You'll have to build asset management services. And there are a few firms that are creating these underlying services and architecture to allow people to trade on public blockchains using self-custodial wallets, right? So that is an area that, looking at the current rate of growth globally, we can either, if the right regulatory infrastructure is put into place, which is nimble, we stand a chance of taking a leadership role there as well, right? But I think that's the area where we are lagging quite a bit.
Yeah, I'm a big DeFi fan, and I think that sometimes we forget. I mean, we love stable coins and everything and all the financial products, but sometimes there are folks that I don't think the people in this room, or I don't think the crypto native people or anything like that, but like some people that are maybe in government or adjacent or learning about this as it's happening, the idea of peer-to-peer finance and disintermediated transactions, maybe they're afraid of it, or maybe they don't even necessarily understand the almost philosophical implications that has on humanity, makes DeFi very interesting. And I think, look, what you're saying, there's a big opportunity, there's a big risk too, though, about how this gets regulated. And we do see some concerns a lot of the times where people aren't necessarily incentivized to increase, that freedom of peer-to-peer engagement. And you see a lot of defense coming from Coin Center and DeFi Education Fund trying to make sure people understand that. But I'm really glad you brought up DeFi, because I'd love to hear all y'all's takes on where do you think DeFi goes from the perspective of, you guys are running some of the biggest exchanges in the world, some of the biggest crypto platforms in the world. And I think you see, obviously, OKX loves DeFi, especially from what you're talking about, and Coinbase has Base, and they have their DEX getting integrated in the wallet. So what is the way that you see exchanges engaging in DeFi? Because people could see it as a competitor, or they could see it as this super huge growth driver and augmentation of the key understanding of what crypto does.
I'll take that one first. So obviously we have Base, and Coinbase sort of sits in this sort of middleware, but we're meant to be the bridge between, centralized finance into decentralized. And Base that is centralized right now. We own it, but it's meant to be an on-ramp for everyone trying to get into DeFi and decentralized finance. So through that process, I think, like Brian Armstrong's goal is to have 1 billion people in DeFi over the next couple of years. So I think obviously it's a major effort for us, but it's and when I talk to my institutional friends, I think they all see this as an incredible opportunity for distribution. But it's not there yet. But they'll come to us and they'll be like, oh, so I can put my tokens out there, or I can put my product out there, and then your retail customers will be able to get them. And I'm like, well, not really. Like, it's not that, that bridge hasn't been built yet. But, our 140 million retail customers are not locked in at Coinbase, but the odds of them sort of stepping over into using Aave on Base or something like that, that's the future, that's where we're going. But it's, there's work to be done, and getting people comfortable with it. I mean, there's a lot of crypto people that are comfortable with a lot of this stuff, but when you're talking about mainstream or Main Street people or your average person, it has to be very user-friendly, and I think that's part of the work. I mean, I don't know if you ever tried to use MetaMask, but that's not trivial.
Yeah, I'll add quickly to that. We view it as the growth driver, right? Like, this isn't an either or thing, CeFi or DeFi. A healthy, vibrant, well-utilized, user-friendly DeFi is what grows the crypto ecosystem. And not just DeFi, right? DePIN and social applications, but just building the blockchain-based financial and non-financial systems is ultimately a driver of growth for financial institutions as well, because we want institutions and our clients and ourselves to interact with both. Because when you have more choice, more options, more liquidity, you're going to get more activity, more growth, more wealth for more people. So it's the ultimate driver. Having clarity of rules is important, and right-tailored rules. You were talking about, right, KYC, sanctions, AML. Those rules are always going to be around, and they rightfully need to be put on financial institutions, which we're happy to do, and figure out how to do that in the DeFi context. But I think for the DeFi crowd, the important thing to think about, I'm based in DC, I talk with policy folks all the time, is what are standards of rules around developing code to ensure that it does what it's supposed to, that it's safe, that it's audited, that you don't get, attacks like we've seen, in other markets like Mango. If we can get good, strong answers to that, then I think we can really create like a future of DeFi that doesn't become this debate over, well, do you just have to turn it into permission DeFi? It can be a strong, growing, retail-friendly thing, and CFI can be part of it. So we see it all as growing together, and it needs to grow together for this market to really take off.
Love it. I think we're out of time. If you guys have any closing thoughts, rapid fire, you're welcome to, but now.
I would just say, I think we've come from a really low point like 2 years ago, and I just think the rate of change is going to be dramatic over the next 2 to 3 years. And if you're not involved now, you better start.
You heard it here, folks. We're all in the right room. Thank you all.